As you know by now, we love to talk about tax planning. Now, what happens if you did not plan? So it's April 15th or thereabouts, and it's time for you to file your taxes, and you realize, holy cow, I owe some money to the IRS. What can I do now that I'm already in the new tax year to fix a problem from the previous tax year? Well, unfortunately, there's not a lot of options here. But there are two things that you can think of if you've not done in the calendar year to maybe consider. And the first is to see if you are eligible to do a IRA contribution and hopefully reduce some of your taxable income. Now, there's a lot of rules surrounding how much you can put in, if you're even eligible based upon whether you have a employer sponsored plan or your adjusted gross income limits, but that's one option you can take a look at. The second is if you're eligible as well to do a health savings account contribution, you also can do that in the new tax year to retroactively help you from the previous tax year. So, if you have an HSA, health savings account eligible health plan, you may make your full HSA contribution in the new tax year and get credit for the previous one. Now, last but not least, when we mention tax planning, I'd be remiss if I didn't say it's never too early to plan for your taxes. So even if you're watching this video and it's March or April or even May, it's not a bad time to take a look at your withholdings. Maybe work with your tax advisor to look at dividends and interest, maybe any distributions from your IRA, and plan for it so that when you do go to file your taxes in March or April of the next year, it's not a mystery on how you arrived at that number.